In terms of the minutes, there is this debate about when they might start the balance sheet reduction. How divided is the Fed, look to you, on the back of the minutes?
Well, we haven't got a date yet. We know that quite a few of the members want to do it. What they cannot say with any certainty, by the way, is what it all means. And I'm suspicious of the overconfidence that this can be done with ease. So there are people out there who seem to think that they know what the implications of a runoff would be, that it might mean a steeper curve or higher yield. I don't see how anyone can possibly know. For one, it's not been done before. Not in my lifetime, anyway. It may have been done 50-odd years ago. But the point is that it may actually have implications for risky asset classes. It doesn't mean much for treasuries, in my opinion.
So with all of this flagging that it's coming, all of this conversation about how it might take place and the speed at which it might be done, even though we don't know when it starts yet, all of that conversation is not going to be enough to settle nerves in markets.
That they cannot possibly know what will happen when they start this process, which is why they're starting in a very slow, gradual fashion to kind of test it. Like any new policy or tool, it has to be tested first. The test can last 6 months, 12 months. It might well interrupt the path of increases in the short rates. So the IOER and the Fed funds that have been going up, that might have to stop whilst they monitor the impact of the runoff, if there is any, from the balance sheet. Imagine if they do this and there's an accident somewhere in the world as this liquidity is withdrawn and a market moves quite dramatically. They cannot possibly know. So I think it probably means that rates are almost where they need to be, and they probably sit there for some time.
In the 2.3s to 2.5?
Well, yeah.